Indian Prime Minister Narendra Modi has called for more autonomy for the country's struggling state-owned banks. At a landmark meeting over the weekend, he assured dozens of top bankers that reforms are coming soon. A report.
The two-day bankers' retreat, Gyan Sangam or Confluence of Knowledge, ended on a high note. Calling for an end to lazy banking, PM Narendra Modi said he won't meddle in banking operations but reiterated that his government stands ready to help. A 7-point reform agenda was hammered out at the meeting. At the top of the list is the establishment of a bank investment committee to oversee the dilution of the government's holdings. The idea is to wean India's largest banks off of being wholly owned and controlled by the government to what they call state-linked. The closed-door meeting was called at a time when loan growth is becoming a real issue. Banks have been treading carefully given the amount of bad debts in their books. And roughly 90% of the total bad loans in the system are held by state-owned lenders.
One of the biggest problems today is NPA, non-performing assets, which is sitting in the books of these banks, which in turn is causing a strain on the capital. So the banks needs capitalization, and all this somewhere has to do with the efficiency of running the banks.
The group also resolved to help small public sector banks become more competitive and, where necessary, consolidate.
Banks being the most important engine of growth for an economy, it's an excellent opportunity for the government now to sort of build a consensus and go in for policy reforms which not only help the banking sector but sort of unlocks the tight credit environment that we have so far.
Cybercrime and improving financial literacy were also hot topics at the meeting. Finance Minister Arun Jaitley echoed Modi's comments, saying India's banks have to be given a sufficient amount of leeway in order to develop a more commercial mindset.